Welcome to the Northbound Wealth Podcast. All opinions expressed by me, my co-hosts, or my guests are solely our own opinions and do not reflect the opinions of Northbound Wealth Management. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, and tax advice or as a solicitation to offer or buy any securities. Clients of Northbound Wealth Management may maintain positions in the securities discussed in this podcast. Hello, everyone. This is Brent Foster, and today is December 30th, 2024, the Northbound Wealth Podcast, and we are the last couple of trading days away from the brand new year. So make your New Year's resolutions, set some goals for 2025, and get disciplined, save, invest, and always keep investing. I love it. So let's review last week. Holiday spending is up. So stocks notched a slight gain over the holiday week. A tech-driven rally in the first half of the week was clawed back in the second half of the week as investors took profits following the market holiday. The S&P 500 advanced 0.67%, while the NASDAQ Composite Index rose 0.76%. The Dow Jones Industrial Average added 0.35%. The MSCI EAFE index, which tracks developed overseas stock markets, rose 1.54%. The S&P 500 brought its year-to-date gains to around 25%, with 2 trading days remaining in 2024. And looking at the tape this morning, the markets are down a little bit, less than 1%, but still down on the day. So kind of giving back some of those year-to-date gains for 2024 thus far, but not much. The benchmark equity index ended Friday's session at 5,970.84. So looking at the tape right now, the S&P 500 is trading at 5,928, so slightly down from there. The Friday session, last week's close of 5,930.85. The S&P 500 closed at an all-time high of 6,090.3 on December 6th. Tuesday will be the last trading day of the year. So, ho, 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 Santa Claus rally, and then there's a no-go. Stocks rally during the first half of the shortened holiday week. Again, holiday cheer won out despite news of declining consumer confidence in December, a drop in durable goods, and new home sales reporting below expectations. The effect of the so-called Santa Claus rally in the U.S. stock market could reverse early next year amid the prospect of new trade policies or tariffs under the incoming Trump administration. Saxo Bank said in a report published this week. So the Santa Claus rally refers to the tendency for stock markets to move higher during the last week of December and the first couple of trading days of January. So let's get into some details. U.S. markets were closed Wednesday for Christmas. Retail sales increased more than expected during the holiday season and came in above last year's growth pace, according to preliminary data from MasterCard. Among sectors, energy and healthcare were the best performers for the week, rising more than 1% each. Only consumer staples and materials posted losses. In healthcare news, the U.S. Food and Drug Administration said it's proposing a rule to set up and required standardized testing techniques to detect asbestos in cosmetic products that contain talc. Isn't it interesting? Like now you're wanting to do that, FDA? It's ridiculous. Like, how about let's get all the chemicals, real bad ones, out of our stuff, our products. The technology sector's 0.9% weekly rise was aided by several major chip stocks, with Broadcom soaring 9.5%. And that's important because it's a top 10 holding in the S&P. And artificial intelligence chip darling NVIDIA rising 1.7%. The financial sector also posted a 0.9% gain for the week. Certain U.S. bank and business groups filed a lawsuit against the Federal Reserve over alleged flawed stress testing framework. Oh, that'll be an interesting thing to watch. Consumer discretionary rose 0.5%, aided by a 4.9% jump in coffee chain Starbucks as employees returned to work Wednesday after a 5-day strike. Electric vehicle maker Tesla logged a 2.5% weekly gain. With consumer staples, the U.S. Consumer Financial Protection Bureau sued retail giant Walmart and financial technology company Branch Messenger on allegations that they forced delivery drivers to use costly deposit accounts to get paid. Walmart registered a 0.6% weekly decline, even though the stock's up a ton on the year. And Y charts, thanks for this data. The Dow year to date, trailing year to date numbers up 17.10%. MSCI is up 3.91% on the year. NASDAQ composites up 34.32%. And then S&P 500's up 28.31. That's a trailing year to date number, not accurately reflected as of the last couple trading days. So that's kind of come down a few percentage points. The 10-year treasury rate is at 4.62%. So that doesn't help you out there trying to get mortgages. You're looking at pretty high mortgage rates, like mid sevens to eights on the 30-year 30-year mortgage. So that's not exactly great for consumers wanting to secure loans. But the 10-year note's at 4.62, and that's a steady increase. A month ago, we were at 4.25, and 3 months ago, 3.75, and a year ago, 3.79. So we're substantially higher than we were on the 10-year. That's going to cause some issues if it gets to 5%. We should see a bit of a pullback in the equity markets as the stock market responds to too high of interest rates. And even though the Fed lowered interest rates 25 basis points just recently, that didn't help because the guidance from Jay Powell was only an expectation, a market expectation setting, a market expectation of only 2 rate cuts for all of 2025, which to me is ridiculous. And he's holding interest rates too high for too long, gonna try to combat that sticky inflation that keeps trending lower, it's at like 2.7 to 2.9% on the CPI. So we'll see what Fed Chair Powell, if he's going to continue to play politics on the economy as the new administration comes in. He's saying that he doesn't know how it's going to impact the economy with the Trump administration coming in. So he's going to keep rates higher for longer, basically. Get used to it. I would say my advice is get used to it. Higher for longer. Interest rates mortgage rates in 2005 and during prior years, like a decade before that, the 30-year note was like at 5 and 6 and 7. So we're kind of at a normal there. Maybe slightly higher. It'd be nice if it was 5, 6 or 5, 6, or even the low 7s, not 8s. That's kind of high. All right. So while Santa got the headlines, the consumer drove the holiday shopping sleigh this year. Holiday spending, defined by the period from November 1st through December 24th, rose 3.8% in 2024. And that's compared to a 3.1% in 2023. That's actually good news. We're a consumer-driven economy, and those of you out there who sell products or buy products understand that. So if the consumer is spending, that's a good sign. Just not going into debt to do it too much. And that's something that we're watching. Economists closely follow consumer activity since consumer spending makes up roughly 2/3 of total gross domestic product or GDP. Market watchers attributed the strong job market and growth in household wealth as primary drivers of consumer strength. Next week's economic calendar will feature the Institute for Supply Management and S&P Global's U.S. manufacturing sector data for December, reports on pending home sales for November, and house price data for October, also due next week. Markets will be closed Wednesday for New Year's Day. So economic data we're tracking upcoming. Pending home sales, 3-month Treasury bill auction Monday, that's today. Tuesday, Case-Shiller Home Price Index. Wednesday, stock market is closed. Thursday, jobless claims, EIA petroleum status report, Fed balance sheet, 30-year Treasury bond announcement. Friday, motor vehicle sales, ISM manufacturing index. Federal Reserve officials Tom Barkin and Mary Daly speak. Would love to not hear from all these different Fed officials with conflicting views. But anyway, I guess that's their part of job interviewing for the head job if Powell gets removed, which I hope he does, prior to May of 2026, mind you. When you're in the seat for 10 years, and that's a little long to have that much power. Let's just turn it over and have somebody get in there now. Let's see. This week, companies reporting earnings. Friday, the Greenbrier companies, which is The only notable real company that I'm following to report. So, tax tip of the week. Whether you picked up embroidering, dog grooming, or making jewelry, a side hobby may not require paying taxes. Do your kids' lemonade stand need to pay taxes? Probably not. But if you're doing something like selling cookies out of your kitchen, you might need to check out the rules. Here are some things to consider when determining whether your activity is a hobby or a business. So, is your hobby carried out in a business-like manner? So, do you maintain complete and accurate books and records for your hobby? Is the effort you put into your hobby intended to make a profit? Or do you depend on the income from your hobby for your livelihood? Do you know how to carry out your hobby as a successful business? Have you made a profit from your hobby? If you receive income from your hobby with no intention of making a profit, you may have to report the income to the IRS. This information, again, is not a substitute for individualized tax advice. Please discuss your specific tax issues with your qualified tax professional. And this tip was adapted from irs.gov. Thank you, everyone, for listening to the Northbound Wealth Podcast. This is the 93rd episode. I'm really excited about 2025, and have a great, happy new year and holiday week. And we'll talk to you in the new year.